It's Sunday, the 19th of June 2016. This is a chart update for Regis Resources. Regis has continued to move higher in the last few weeks with the Australian dollar gold price. I mean, this is probably one of the best turnaround stories of the last year. After it had that bottoming in sort of March to June last year, it's up 200% from the lows. This week getting into that sort of 350, 360 region. I actually got out of a few this week. Still holding some, but I just it's hard to see the upside continuing this stock. It is probably the highest rated on all the metrics now compared to a lot of the other Australian dollar gold producers. Obviously, if the Australian dollar gold price keeps going up, Regis will keep going up. But I think that recovery process has really completed now. So they're back up above, but higher metrics than a lot of the other companies. So and there's not then their forward production profile is likely to be consistent without being overly exciting. They might produce an extra 20 or 30,000 ounces next year, and the market I think has probably already factored that in now. I think some of the selling action this week was quite strong. You got some very big bars here, big long candles. It kept spiking above there early on, and then getting pushed back down in toward the close. So we can see a lot of red candles here. Friday's action's probably a little bit hard to read because that was a rebalancing day for the indexes, for the gold ETF indexes, which I think Regis is in both the GDX and the GDXJ indexes. You're also looking at, it's getting in toward a bit of an old area where there's potentially some quite large resistance. You can see there's this sort of range here between sort of $3 and $4.30. There's a lot of this range also in the middle here. You can see that's just around this 360, 370. There's some quite big bars there and a bit of volume, and that potentially is some stale holders there who want to get out of this stock. Obviously, a lot of people were losing a lot of money who'd bought in this area, and often that's what creates these resistance levels in the future is stale holders. So there was some fairly gappy action here. This is when the gold price was really tanking, and the gold stocks were in the doldrums. So in 2013, so I'd be a bit cautious now holding the stock, expecting it to have a lot more upside. It's the same story for a lot of these larger producers, though. They've had that just dramatic runs. I think you still want to hold some stock because the Australian dollar gold price does look like it's going to keep going higher. So the fundamental is still there, but you just got to be a bit trying to get a good entry in these stocks and not buying when it's up at the top end of this range. You can see here there's a bit of a trend line going up there. So it's sort of at the top end of that trend line. Let's see if it's here. Yeah, it's not a bad trend line, but it is up definitely toward the top of the range there. And I'd expect to see some consolidation action here after usually when it's had these spikes, it's pulled back and consolidated. So you might see another month or two of sideways action. But they're not. I just think you need to be a little bit cautious at this point, and that's why I've taken some off the table.